markets. Joining us from San Francisco, Michael Cuggino, president of Pacific Heights Asset Management, which oversees the successful permanent portfolio fund. Michael, good to have you back on the program. So what does this mean for the markets when you have this huge turnaround just in the last 15 minutes of trade? Does that mean that the world is not coming to an end?
Well, I don't believe the world is coming to an end, but I do think that, the markets are trading on news of the day and rumor, announcements, innuendo, that sort of thing. And I think that that's going to continue to happen until we have some sort of visibility into the future with respect to the United States economy, what's going on in Europe, as well as more visibility as to what's going on in Asia. Is there a slowdown? Do we have growth? To what level? And, all of those sorts of questions. So I think until then, you're going to see volatility, you're going to see ups and downs, you're going to see intraday ups and downs, similar to what we saw today, and it's similar to what we've seen the last couple of weeks.
Yeah, well, we had markets turning around on speculation that European Union officials are examining how to recapitalize the region's banks. So again, like you said, it is speculation at this point, according to a report from the Financial Times. Do you think we've seen bottom for shares? Is this a permanent turnaround or just for the time being?
Well, I'm not sure. I think, there's enough uncertainty out there that makes it a question mark. I mean, certainly stocks could go lower. I think in the United States here, one of the things we're focusing on is Q3 earnings. The next 3 to 4 weeks or so, we're going to get a real sense of how the third quarter played out. We're going to get a sense of what companies think about Q4 and early in 2012. And, if those numbers are good and upbeat, then that provides a solid foundation for equities to maybe make another run. If there's a lot of misses, if there's uncertain outlooks, apprehension going forward, then you can see stocks definitely fall further, because I think the one thing that's kept U.S. stocks up the last couple of years has been corporate profits. I mean, without corporate profits here in the States, we wouldn't have growth at all. And so it's a huge, fundamental issue for U.S. stocks.
I was going to say a little bit of help from the Fed also brought in some gains, I'm sure, and propped up the market. So what did you think about what Ben Bernanke has to say? He says that basically the recovery is faltering, but there's more ammo left from the Fed. Does that mean that he's maybe telestrating QE3 down the road?
Well, I mean, the Fed has multiple tools. Whether they call it QE3 or some other buzzword really doesn't matter. I mean, this Operation Twist that they started this week is one tool that they have. I mean, I am skeptical that that's going to really provide much in the way of any benefit at all. And I think really, by and large, the Fed's most effective policies and bullets in their gun have already been fired. I think realistically what you're seeing is the Fed trying to provide optimism, cover up for the lack of fiscal policy and fiscal leadership here, where, if you look at it on a scale, the scale's unbalanced. The Fed has done everything they can monetarily, but fiscal policy hasn't kept up. We don't have enough growth initiatives. We're not tackling our deficit issues here, spending issues, tax reform issues, and we're not, trying to get people amped up to grow the economy and build the tax base. So that's something that needs to happen here to complement monetary policy.
Hey, Michael, your permanent portfolio has been most rivals, returning over 10% in the last 5 years, with a really conservative mix of assets, which includes gold, silver, Swiss franc, stocks, and bonds. Are you yourself, how are you preparing for a possible maybe orderly or disorderly default in Greece?
Well, it's not so much Greece, but it's more, where that contagion is or where that spreads, basically. I mean, the issue, the European Union could function without Greece as being a part of it. It's not a material part of the overall economic activity of Europe. However, it is very symbolic. And, if Greece goes out, then do others follow? How long are the Germans going to keep propping this thing up? And instead of maybe taking the issue once and for all and guaranteeing debt and banks and et cetera, you've got this sort of daily drip of news coming out and uncertainty, which is not helping the markets because it keeps that air of uncertainty and lack of visibility alive. I'd like to see something concrete done to shore up the whole situation. And until that happens,
Michael,
I
we
think
have
we're going to continue
Goldman Sachs reducing their global growth forecast. Sorry to interject there, Michael, but they're predicting basically recession not only in Italy but also in Germany as well. That seems pretty dire, don't you think? Do you agree with that assessment?
Definitely not positive. I mean, it's one forecast, so I don't want to give it any more weight than all the other information out there. However, you know, to the extent that Germany starts to falter, that's a big problem because they are by and large propping up the rest of the continent right now. And any political instability there with respect to a continuation of Europe's monetary issues is going to be a huge blow to the common currency over there. And it just brings to light the problems that they have unifying political will and monetary will to keep that currency, you know, united, which is huge for the continent overall in terms of economic activity and efficiencies. It's one thing we didn't have to deal with in the United States in 2008. We had that unification of political and monetary, which allowed us to be a lot more flexible and quick to address some of our problems, at least in the short term.
All right, Michael, thank you for sharing your time. Good to see you as always. Michael Cuggino, President of Pacific Heights Asset Management, which oversees a permanent portfolio fund.